Yo, what's up everyone? My name is Andrew Warren and I have an absolutely huge video on my channel today. Probably one of the most important and biggest videos I've ever uploaded on my channel, just in terms of such a huge move that I've made in the market. And before we even jump into this topic, just make sure that if you do enjoy the videos on my channel and you appreciate me uploading update videos like these, I'd really appreciate you dropping a like on the video, smashing that like button. It really does help me out, and it also motivates me to keep on doing these videos that I do and keep on being transparent with you all. So I would really appreciate the love. But jumping right into this, basically, if you look at my portfolio, if you're familiar with my portfolio, you will notice that one stock is completely gone, and it was my largest holding out of the 4 main stocks that I have purchased. Keep in mind the CLF is just a free stock, so I don't count it. So right now I only have 3 main holdings in stocks, and the stock that is missing is VOO, which is an ETF that tracks about, I think, the top 508 companies in the S&P 500. And keep in mind that VOO actually contains a large holding of Microsoft stock and a large holding of Apple stock as well. So that was another reason why I preferred VOO as well. For one thing, VOO basically represents the general trend of the stock market. It pretty much mirrors almost exactly what the stock market is doing for the day and performing for the day. So an advantage to VOO was that it had some of my top choices in it, such as Apple and Microsoft. So if we go over to VOO, as you can see right here, I sold 117 shares at a price of $270.58, which is about $32,000. It's $31,658.04 to be completely precise, and I sold that 4 hours ago. So as you can see, I think I sold about in this time period right in here, like right before it actually went above. However, I thought I was getting lucky for the day and maybe hitting a high point before it spiked downwards towards the end and into after hours. So I sold at an unlucky time compared to the end of the day, where I could have maybe made like a dollar or more on each individual share that I would sell. However, regardless of all of that, I feel like a huge weight has been lifted off of my shoulders. Just going back on everything and talking about everything in general, I know that I have always said that the best thing to do is to not panic sell and to hold high quality long-term stocks, and I still absolutely believe that 100%. And I'm here to emphasize that selling VOO was not me panic selling. And by the way, full disclosure, I think I was in the negative at like negative 6.8% for VOO, and I think it was about a $2,300 loss. So I did sell VOO at a loss, and I'm going to explain exactly why I did that in just a second. But just to prove it to you right here, even with selling that at a loss, I'm still up 7.89% all time, or about $5,600, and we are still way in the green right now. So I just want to point out and emphasize that although my main diversification stock, the main stock that I purchased purely just for safety and diversification, was performing worse than pretty much every other stock out there that I own. It actually was performing worse than every single main holding of stock that I have. For example, it did worse than Microsoft. It performed worse than my Tesla earnings right now. I'm still in the positive for Tesla right now, and it also performed way worse than Apple. Every single one of these companies right now I am in the positive on: Microsoft, Tesla, and Apple. So here is my explanation for VOO and why I sold it. For one thing, we have to address this: I did not panic sell it. I did not sell VOO at a loss because I'm afraid of what is coming up in the future, or simply just got scared and sold it. I did not do it for that reason. I've kind of touched on this already, but the main reason that I sold VOO is because it was kind of disappointing in terms of gains, where, like I mentioned earlier, I picked VOO as just that safe, diversified stock that it diversifies itself for you, so I don't have to have like 100 different stocks within my portfolio to balance everything out compared to my riskier investments, such as maybe Tesla or Apple. However, the pattern that I was noticing was with the stocks that I do my research on, I do my due diligence and watch tons of videos, read tons of articles, and simply trust my gut instinct on. Every single one of those stocks right now that I've used that logic towards is making me money right now and is way ahead in terms of a rate of growth compared to what VOO was doing for me and performing for me. So for example, let me just emphasize this even further. You have the 5-year chart for VOO, about a 40% gain so far, and it averages about a 10% gain every year. But if you look at the most recent highest peak, we were up about 60%. But in general, this stock performs at about a 10% growth rate every year. But if you look at the most recent crash, we've had pretty much a V-shaped recovery across most stocks like Microsoft and Tesla. If you look at Microsoft, that's pretty much a V-shaped recovery. It's already back to where it was at the peak before the drop. But if you look at VOO, which is a stock that obviously tracks some of the most popular companies that I do like, such as Microsoft and Apple, if you look at it, it is barely even halfway to recovering. And I've sort of realized that VOO, that ETF, and the whole idea of how everyone is supposed to diversify, pretty much, and I've heard this before from people like Stephen Mark Ryan from Solving the Money Problem, I've noticed that people have said, and I have to agree with this currently with my situation, that sometimes diversification is simply just a defense for ignorance. However, if I'm a person that I think I've done my due diligence and all of my research enough to back up what I believe in, I believe that I am not ignorant enough to make the typical investor's mistake. So with that, I'm super careful with the stocks that I pick. That's why I only have 3 stocks, and I did only have 4, and now I've narrowed it down to 3, because I think that VOO was simply averaging out and diversifying, which was therefore hurting me a little bit more compared to me just putting the money that I had in VOO into stocks like Microsoft, Tesla, and Apple. So that diversification with VOO was sort of there to protect me against the ignorance that I may encounter on some of the other plays that I make. But so far, there's really no ignorance in terms of my gains. Every single play is positive, as I've said. Every single investment here that you see besides CLF, I mean, CLF is too, is positive. And honestly, a problem with VOO as well is, although it does include stocks that I like Microsoft and Apple, but it also contains stocks and companies that I would personally never invest in out of my own will. And a lot of that puts VOO at a disadvantage or a slower resilience rate when encountering a crash due to this diversification across all sectors. So VOO is not just technology, it focuses on healthcare, commerce, sales, and many other aspects. So by doing this diversification, it's putting me in other sectors that I would never willingly invest in. So basically where I'm at right now is I believe technology is where pretty much all of the money is going to go to in the future and for the next 30 to 40 years, at least in my opinion. So pretty much my logic with my whole investment strategy is that I want to avoid investing on things like commodities like oil, food companies such as like Kraft Foods and stuff like that. Just pretty much what I would consider in relation to nowadays archaic and old-fashioned forms of investing, at least in my opinion. I think tech is absolutely the new wave for investing, and it's pretty much proving it throughout the past bull run that we've seen up until the most recent crash. If your portfolio has done super well over the past few years, a common question is for someone to ask you if you invested heavily into big tech. And we're still seeing that with the most recent crash. I mean, even if you look at Tesla, which is a pretty volatile stock, it has pretty much rebounded since the most recent crash. And if you look at Apple, it has pretty much done the same thing as well, I believe. So Apple has done the same thing if you look at the past year. If you look at Microsoft, it's done the same thing. And Apple is a little bit different from Microsoft and Tesla, but I do believe that they produce some of the most amazing products out there, and they get a good profit off of their initial cost basis, since it does have that higher status in our culture and stuff like that. So basically, with everything that has happened so far, I've realized that especially in Robinhood, in this taxable account, I'm going to either hold a stock for at least a year, which is probably what will happen on a lot of these like Apple, Tesla, and Microsoft for sure. And if I hold it for more than a year, then it's only going to be taxed at a 20% capital gains tax rate. However, if I hold it less than a year like I did with VOO, then my profits will be taxed at the normal tax rate. So let's say like 30% or so, especially if you're self-employed. So that was another thing with VOO as well. I felt like with me selling at a loss, I didn't have to deal too much with taxes. I can simply file a capital loss tax, and that will actually help me combat some of the gains that I've received so far on stocks already within the past year, because I need to emphasize that I didn't start investing until like December. So all of these gains have came in about like 5 months or so. So basically the minus 2,000, the loss that I took by selling VOO, I can file that at the end on my taxes. So basically, let's say I had a profitable income of $30,000 to $40,000 for this year. Let's just predict that. Then I'll be able to take like the $2,300 loss off of that profitable taxable income, and I'll only end up having to pay taxes on like $37,700 or something like that. So that is something to keep in mind if you're kind of worried about selling at a loss. And then another thing as well is to just keep in mind the sunk cost fallacy, where a lot of people tend to put more effort into something or keep investing into something or just hold on to it for the long term because they have already put so much time into it and don't want to like give up on it then. And I took that into consideration when I was doing this, and basically here's a breakdown of my logic with VOO. So I'm taking into consideration the future as well. With VOO, I was down about 6.8% or $2,300, and I realized, okay, 6% is almost a year's worth of growth in VOO. So let's say if we are in good market conditions, it would take about 6 to 8 months for me to regain that $2,300 back. However, if I simply just took a loss right where I was and invested some of that into Microsoft, which is one that seems to get about 40 to 50% every year in gains, and it doesn't seem to be stopping, then I thought I could easily make up for that loss with VOO. It's basically me just redistributing my investments to maximize my profits. Even if it's at a temporary loss, in the long term, I will be making much more money, and especially if there is a crash coming up, I can almost promise you VOO will take a way more tremendous hit than any of these other tech stocks out there will, which is another thing I'm taking into consideration the future as well. I would much rather sell at a 6% $2,300 loss with VOO and then maybe redistribute some of that money and some of those investments into Microsoft and hold on to a little bit of cash than have another stock market crash somehow happen like people keep saying it's going to happen. And then of course VOO could be down like 10 to 40% below this mark right here, and then it would really take me years to recover on VOO. I mean, as you can see right now, the past year is only up 3.64%, but you have a stock like Microsoft, which I think is worth putting a lot of my money into, where it's up 45% almost, even with the most recent crash factored in and the recovery coming back already. So in my opinion, I would rather take a loss now on the minus $2,300 and reinvest it into something that I think can return that $2,300 much faster, other than me just simply holding onto it in VOO and hoping that it recovers faster. And in addition to that, I think that for one thing, I have the cash advantage right now. Some of my portfolio is in cash, so if there is a crash, I'm at an advantage where I can buy at a better deal, and I also don't take a bigger loss. And for another thing, if there is another crash, I would rather most of my money be in Microsoft than most of my money be in VOO, because I think VOO is going to take a harder hit, and it will take much longer to recover, and it is less resilient compared to Microsoft, which it may take a similar hit or less of a hit, but it is more resilient and it recovers at a way faster rate also. And I simply think that every single one of these stocks, maybe some are a little bit more risky than others, like Tesla, of course. And then, of course, Apple is extremely overvalued compared to the fair value, but I think that Apple is always going to be an overvalued stock unless the analysts finally adjust it, because Apple is extremely profitable and they have popular items and products. But anyways, that's basically my logic of why I sold nearly $32,000 of stock, and most of it is simply not focused on whether a stock market crash is occurring. The majority of the reason that this was sold, obviously a crash was taken into consideration as well, but the majority of reason as to why I sold about $32,000 in VOO was because it was unneeded diversification into other stocks that perform more poorly than my hand-picked selection that I have right here. And I do think that diversification is just a guard or defense against ignorance, in which I think that I do enough research and I watch enough content to understand the stocks that I'm looking at and that I won't make an ignorant play. So it's simply just me readjusting my investment into something more optimized that I think will make more money for me. That's basically the simple breakdown of it all right there. Anyways, I just wanted to do a quick update video on this. I'm sure that some of y'all would be interested in something like this, especially where it was such a huge move. And then also, of course, I will be talking about some recent purchases as well in future videos separately, because I want to break down the individual company and the individual purchase and stocks as well. But as you can see, you do get a little bit of a sneak peek with it right there, as you can see with my stock portfolio. You can see a few numbers have increased. I won't hint as to what has already done it, but if you're familiar, then you have the advantage of recognizing that. But I hope you all enjoyed this video. Please make sure to smash that like button once again. And if you would like to begin investing, feel free to use my referral links for Robinhood and Webull down in the description below. That would definitely help me out with the recent loss that I took, the $2,300 loss. So I would appreciate it. But one good thing about all of this is I feel much more happy and much more confident in my portfolio now that I have weeded out a stock that I didn't necessarily pick because it was like one that I had handpicked and researched. I mean, obviously I did some research on VOO and stuff, but it's not one of those stocks that was purely optimized towards what I was looking for in terms of innovation and everything like that you get with Tesla and Microsoft and Apple. So I felt like I just weeded out the stock that I thought was a little bit unnecessary compared to other ones and companies that are just way more advanced that I think will produce me a much higher gain percentage in the future. So anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week. Stay safe out there.